My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. I hope you're doing well, and I hope you had a great weekend. Let's take a look at the markets, but before we start, as always, I need to stress that trading financial markets unfortunately is risky, and there's a general risk that we'll lose all of our invested money, so please bear that in mind before you start trading. This is a little button here, risk disclosure statement at the very bottom here, which you can click on to read a little bit more about it. As well, if you like this show or this presentation, then click here on technical analysis. There's a lot of different technical analysis setups here that we have been sharing. So make sure you read up if you're looking for different ideas and perspectives on different markets. We cover quite a lot of Forex, of course, and cryptos. As well, coming up this Friday, we have a special educational webinar on Friday the 27th at 3 p.m. London time, where I'm going to show you guys a short-term scalping strategy. It's free to join. You just need to sign up here, and you will be a member of the premium section of Trade Captain, and from there you can register to other webinars like this one coming up here on Thursday, May 10th, which is when we take a look at the top trade ideas for May 2018. So check it out. You find this on the education and webinars. Now let's just begin. This is the euro versus the USD. And if you've been looking to buy it, this is sort of your opportunity, maybe later today. So as you know, the market is trading sideways, and it's been trading sideways between 121.55 and 124.78 for quite some time. My preference, because of the big picture uptrend, is to be bullish. And there's two ways of being bullish. One is buying the dip, which is buying around 122.49, maybe all the way down to 122, with stop loss orders below 121.55. Why? Because as long as you trade above this level, well, at least in the big picture, as you can see, we're clearly heading higher, and as long as you trade above this low, we should be moving up. On the other hand, if we take out this low, you can probably see the market decline down to 119.20, which is the January 10th low. Now, the alternative setup of buying here, which is my preferred actually, is to buy with the trend. So buy a so-called breakout. When you go buy at when you take out a prior high, that's a breakout. When you buy like this is buying a dip or buying the correction. And the reason why I prefer buying the breakout is that I know that if we take out this level, then probably want to go up and down and then probably continue to move to the upside. The issue here is that we have been trading sideways here for a few months, and we could easily continue to do so. So I personally don't think it's sort of the best way of allocating my money. I want to go with things that are trending, because then I buy and I get less, but my money is working more effectively than what could happen here, because you see people bought here in February, bought here again by the end of February, end of March, beginning of April, and we're back at it again. We're back at the same level. So some people have been waiting months for this to play out. Anyway, to summarize, bullish about 21.55. That's the trend. Trend is bullish above there. People might look to buy here. This market might head to the upside. Alright, so this is Bitcoin. I actually been very bullish on this market. As you know, I turned bearish up here, and the market moved down lower, and I turned bullish on the break down here. In fact, I bought a bunch of coins. I bought Ethereum, Ripple, and Litecoin, and I decided to cash out on all of them last night. And the technicals for some of the other markets look different to this one, especially Ripple, which is up quite a bit. But Bitcoin here, the reason why I cashed out as well is because, again, one, we had quite some decent moves. The other thing is that usually the highs on Saturdays and Sundays, they tend to be defining highs for the week. So with this in mind, the market actually, sorry, I got all these alerts there. Sorry, these highs tend to be defining highs. So if we don't take out this Friday high here or Saturday high, this market could easily move down. But we're still seeing a lot of bullish momentum. And if we take out 9,209, I think the market may head to the upside. Okay, that's what I would suggest to look at. I was trading Ethereum USD also Ethereum Euro, and I've bought down here at 342, and I booked profits. I think 515 or something like that, and it's looking quite good. It could easily move up higher, but starting to hit some resistance. And then I bought Ripple against Euro as well. And here I think I made a good choice to step off. I bought down here at 45 cents, 45 euro cents per coin, and I booked profits pretty much up here. The reason here is you can see you have some very nice, decent rally to the upside here, so it feels like up here in this whole section here makes sense to book profits. But you're still having quite a lot of momentum and bullish setups, so it's definitely something you want to keep an eye on. Here are crude oil prices, and crude oil prices are bullish. We touched the buy zone already on Friday. The idea was, trade above 65.49, and this trend is bullish, might go down and then bounce. So it had that first bounce, and it could easily go down, and I still think people are gonna probably be buying here with stops below this level. Why that level? Because the trend is short-term bullish. You can see price creating higher and higher lows, and as long as you're above this low, the trend is bullish. And with that in mind, I want to be looking to be buying either on a pullback, as I showed you earlier, like which this is. The alternative is a breakout to the prior high, which in this case would be this high up here. Here is gold. It's under pressure. It's moving down. 1,302 is support. And I think the market here is targeting the lows, and maybe down here traders are gonna look to buy again, but and that's it. You just need to wait. You just need to understand as well that this is a sideways market, so very similar to the euro. And here's the German DAX. The German DAX. So I'm bullish, but not from current levels. Sorry. The idea was to, take out this high here, and this market can head to the upside. But as I showed to you guys, I think it was on Friday, I said that, Friday and Thursday, I said that US stock markets are gonna pull back a bit, and that could easily weigh on the euro. And we're seeing more of that today, and I think this market could maybe drift a little bit lower. I'm not sure how much lower, but drift to the downside a bit, and maybe around 12,404. I think traders might look to go long stops here, and the alternative is to break to the upside. However, though, I think and I suspect that you'll probably have more weakness than the S&P, and you'll have more weakness in the Nasdaq, and that's gonna last for a few more days. And when you see that, those markets are bottoming out, or are at levels where they could be bought, then I think at that point this is going to be interesting. So I would be very careful with buying here until we see US stock markets moving down lower. Okay. Alright, if you have any questions or anything, just use the chat box. You have a few minutes. We have Puppets P. He says, good morning, Alex. Please tell us your opinion about gold. Thank you very much. Yeah, so about gold in general, if it was down to macro fundamentals and interest rates in the US in particular, then gold should be trading down here, maybe 1,200, maybe 1,130. In fact, the dollar in general should be much stronger than it actually is because of macro fundamentals, but people are not really worried too much about fundamentals, at least not right now, and it's like that sometimes. And the idea here is that we just need to stick with sort of the technical levels and the ideas that people are trading with, and then just kind of go with the charts, so to speak. So here, for example, even though I think maybe gold should be trading down here from a macro fundamental perspective, technically it's bullish. And I think if we take out this 1,376 level, which is this level up here, I think at that point this market could rally substantially higher. Except that I don't really know exactly why people are going to be buying it, but some scenarios could be the following. Say that you see stock markets declining, and then people are gonna say, all right, let's buy gold because of um, the risk of a recession or to protect your stocks. So that's one idea. The other idea would be that crude oil has gained quite a bit, and U.S. economy is doing good. That's inflationary, and then people say, yeah, they want to buy gold because to want to protect against higher levels of inflation in the future. So that could be sort of another idea that could trigger. But eventually, I mean, it wouldn't surprise me. Let me show you. Let me show you what I am talking about. So I'm working, it's a little bit late, I know, but we're working on the Forex second quarter outlook, and this is the euro in blue, and this is the difference between European and US swap yields. The swap yield is sort of the price that your bank pays to arrange for mortgages. So when they want to borrow money and lend it out to you for mortgages, then the reference point is usually the swap market, and then they put a markup on that, and that's how you get the mortgage rates. It's as well, it's a product that lets you fix the rate, right? You know, when you buy a house, you can say to the bank, well, over the next 3 years or the next 10 years, I want to have a fixed rate. And that fixed rate is the swap rate. Now, you can see that the difference between the swap rate in one country and another one tends to lead the euro dollar very well, and it's been sort of the working model for a lot of traders, so for fundamental traders for many years. And it's also these interest rates, they influence your swap rates. So you know when you buy the euro sometimes and you need to pay a little bit to hold the position, that's because interest rates are higher in the US compared with the eurozone, and that's why you need to pay for it. And if you go short, you actually make a bit. It's just a little bit like the carry trade. So this indicator, if you just look at it, I'm not saying the euro should be trading down at parity, but it should definitely not be trading up here. It should be moving to the downside. And this is sort of a model, and that tends to sort of be right in the longer run. And I remember 2013 and 2014 was a very similar situation with the market, which is heading up and up and up, the euro. And eventually what happened was that the macro fundamental traders and analysts got it right. It's not very obvious here, but the currency, because if you adjust the scales and everything, what happened was that this line was about here and the market moved down. And I think that's something that could happen eventually, and it wouldn't surprise me again if, say, the euro takes out, I think I said 121.55, that the market could go down to sort of the lows. I think it's November, December, so I think 117 in the euro. And the reason why I'm talking about this is that the same sort of interest rates, there's a very tight correlation against gold, and from that perspective, gold should be trading much, much lower. And it just has to do with the fact that the US economy is doing really, really well. But trading that idea, so if you want to trade a bearish idea, you need to wait for a break to 1,302. But then again, this market, it doesn't want to trade much lower just yet. And if I take out this level, I'm gonna try to get involved. Why? Because if we take out this level, you're gonna risk, maybe it depends on wherever the low is, but I'm guessing maybe 3.5%. And if it goes up to major resistance, sorry, you can make it maybe up to 12%, 11%. So the risk reward ratio is really, really good. Good morning, Antonio. Thanks so much for joining. Okay, guys, I think we're gonna finish. So thank you so much for joining me here at the daily market update. If you like it, click on TradingView. It's not on TradingView. You click on the link, and then you click on like. Please help me out on that. And if you're on Twitter or things like that, then don't forget to follow me. My Twitter handle is AlexFX00. Very straightforward. Just follow me. I publish my stuff, and I publish a little bit as well all the other stuff from TradeCaptain.com. If you want all of the content from TradeCaptain, then we do have a TradeCaptain handle, and it's Trade CPT. And here you will find all of the setups that not all yeah all of the setups, like literally all the content we publish. So a lot of macro fundamental stuff here that could definitely help you with your trading. One of the most popular sections, in fact, are the daily outlook. So on the news, daily outlook, you find the morning update and mid-morning update as well. It's very short, very brief. You just read it. It gives you a little bit of an idea what's going on in the market. We add a chart or so if possible as well. And then you have the crypto updates as well. We got a bunch of technical levels here that you can use to make trading decisions and support you in your trading. Alright guys, thank you so much for watching. Thank you so much Papits and Antonio for joining me in the chat today. If you want to join me in the chat, just sign up to YouTube and catch me here tomorrow, same time. Thank you.